Hello, everybody. Memorial Day weekend, May 25th, 2024. And we're going to cover some topics here in a piece that I'm doing. Really, I'll only do this for long weekends, but long weekend reading. I will be putting links to relevant articles in the Stocks of the Week piece each week from here on out, just so that there is more in-depth coverage of what we're doing, and I don't have to regurgitate. You can just go to something somebody else already wrote. I'll give you the ones I agree with. I'll give you the ones I don't agree with. I'll have a little commentary like I do in this piece. So 4 things we're going to cover. Financial markets only expect 1 rate cut this year compared to the initial expectation of 6 rate cuts. I think the 6 rate cuts were always silly, and I think the 1 rate cut is probably wrong as well. NOAA predicts the highest number of hurricanes ever, which aligns with our energy cyclical theme and our clean energy secular theme. I think it's also interesting to note that they are debating right now whether to add a category 6 level for hurricanes. There have actually been 6 hurricanes in the last 9 years that exceeded category 5. We called them category 5 and called them superstorms, but we didn't actually have a category 6. And they are debating whether or not they should just add category 6 for hurricane levels because we do expect 1 or 2 this year. U.S. natural gas prices decreased after the storage report, which is indicating that peak natural gas supplies will come around 2025, 2030. That was an AI generated bullet point. I don't know if that quite follows, so I'll probably fix it up. And there's a China deal to be had. So let's think about some things. First off, the rate cuts, I think, are misunderstood by most people. There is a narrative that the chest thumpers and foot stompers and screamers and yellers and repeaters give that inflation is always and everywhere a monetary event. That is from Milton Friedman about 50 years ago. What's interesting is that they never really understand that phrase because there's more to it, as well as Friedman's own students proved that monetary policy wasn't the only thing that could cause inflation. Supply and demand imbalances in goods and services, particularly underlying inputs such as copper or fuel, often can cause inflation. And what we have seen, the recent inflation, they just did the studies and repeated them. So several institutions have done the studies now. Around half, that seems like a little less, but pretty close to half of the inflation that we have had came from corporations that raised prices, not in reply to higher input costs, but just because they thought they could get away with charging you more. So that's why their margins expanded and earnings looked pretty good. It wasn't because they had to raise prices, they just thought they could get away with it. So about half of inflation is actually the corporations doing as much gouging as they can, right? Just setting a higher bar. One of the reasons that the Biden administration's Justice Department has been hammering on monopoly pricing power and challenging some of the mergers is that we have been developing oligopolies in multiple markets. It's not just technology. We talked about already that it's energy, and the energy oligopoly is getting tighter. So if we get to a point where small business is completely destroyed and emerging growth businesses have a hard time getting off the ground because the big guys put the thumb on them, legally, financially, predatory pricing, then ultimately we get higher prices. We have seen that in market after market. It is complex, but basic economic lessons are that when you allow for monopoly pricing pressure, you get inflation. And that is what we've been seeing in multiple markets in the US, less so globally, but because the dollar is strong, we've been exporting inflation to a lot of the world. And that has, irritated a lot of countries, including Japan, which buys a lot of our debt. So we have to figure out a way to work that out. Now, I think, and I was thinking about this morning as I watched Wall Street Week, which had Paul Krugman on. I really don't see the deficit and the debt being a functionally difficult problem to fix. However, it is a politically difficult problem to fix. So while the numbers really allow for pretty easy fixes, the politics don't. So we'll see what happens with that. In any case, moving on to energy and what's going on with climate change. The NOAA predicts the most hurricanes that is ever forecast. Doesn't mean it'll happen. We'll see. But the forecasts are not only for more hurricanes this year, but several very strong ones. Earlier, I talked about category level 6 hurricanes. They're happening. Whether we call them that or not is another story. But it does mean that the wake-up call, and I talked about this on Stock Talk on X Spaces this week, I think that you are going to see a massive hurricane hit, and it might not be this year, but at some point this decade, I would say, we are going to see a massive hurricane hit Florida. And it is going to wreak havoc to the point where it wakes up a lot of people to the reality of climate change. And when it happens, I want you to think about Hurricane Katrina for a second. That was 21 years ago now. I forget exactly. I know it was the early 2000s. 2004? Was it 20 years ago? If you've been to New Orleans, you know that it's 20 years later now, and they just finished their seawall along the Mississippi. It's 100 yards wide and 30 feet tall, but it's only a couple miles. Think about what we need in Florida to protect it. Hundreds and hundreds of miles of a wall like that. And it might just create a pot for the water to settle in. I'm not sure how they can protect the Miami area. We already know that a lot of the keys are underwater and not coming back. You know, when I was there 5 years ago, there was the bridge that came down, and they've replaced the bridge. You did get a very good picture of an iguana at the end of the bridge where it goes into the ocean. And you can see where areas that used to be on low-lying land are now underwater. And that's never going to change. That's never going to be above water level again. It's never going to be land again. So what if that happens to Florida all the way up to Fort Myers again? We did see the big storm of Fort Myers a few years ago, and I would expect that, you know, I don't know what side of Florida is going to get hit. Maybe it's both sides. Maybe the storm goes right through it. But you're going to see a major wake-up call, and we can't predict when. So it makes sense that we continue to accumulate our clean energy stocks on the dips. And if you've been watching Enphase and Generac and SolarEdge, the three that I think are the must-owns, because that's actually an oligopoly basket for energy management and storage, that I really don't see how they can lose. You know, can they go down for a year or two at a time? For sure. But you really want to be building positions in those particular stocks. I took a look at the U.S. solar panel industry, and I think it's at solarworld.com, one of those websites. They keep track of it. And the U.S. solar panel industry is developing. You have about a dozen companies producing panels now. First Solar is the clear leader for utility scale. But then you have other companies that are also producing panels. Some of them are American, some of them are Chinese, some are Canadian, Malaysian, South Korean, but they are producing here in the United States. So the backbone of the U.S. solar industry is just about built now. And you have several plants expanding production, several that are maxing out their production, because you are going to see solar hit hard and fast once there is a catalyst to make people go, aha, climate change might be real. And it might be significant enough that we should deal with it. Unfortunately, I think that's going to be a calamity in Florida, but you know, we'll see. Maybe we just wake up and get lucky anyway. Natural gas prices fell again, and they're just plumbing these multi-year lows because the natural gas supplies rose. I don't think that that is a very sustainable inventory. Because summer is already projecting to be very, very hot across the United States. In Wisconsin, we haven't had snow since March. It's May, and you think that's funny, but we've had snowstorms in May before. But it's been very warm for a month already. My flowers look really good. The pool was open 2 weeks early, and I think that that is something that is becoming very, very normal and regular, to the point where you've heard me talk about building a house with an indoor pool, which adds about $250,000 of cost. I don't think I need to do that. I'm going to have a pool, but I don't need to put it indoor because I'm going to be able to use it 6 months a year. May, June, July, August, September, into October if I keep the water warm. So, you start to think about where do you want to live and how do you want to live and what are you going to do to stay safe? And, where can you have a climate castle, right? Where can you have your home as your castle that it's climate resilient? And you're talking the Midwest, folks. We got water. We have no hurricanes, no earthquakes to speak of. We do get a tremor once in a while. There are a couple of fault lines, but they're minor. And the tornadoes, we know where they pretty much go most of the time. And we have basements up here anyway. So it's not like many parts of the country that don't have basements. We have basements. So even when there is a tornado, and I had one bounce right over my house once, you go in the basement and you're safe. So I think that part of my thesis on real estate also plays into the clean energy and climate change themes, in that if you want a climate castle, and I'm saying that because I own the website climatecastles.com, and that'll be going live for Jolene here soon, as she is now officially licensed and with Keller Williams and has her first client already. We are going to really pitch the idea that if you're looking for a second home and you're in a high tax state or an environmentally dangerous state, you ought to be looking in the Midwest. I think Michigan's got a lot of great things going for it, Minnesota, but we're in Wisconsin, so we're going to focus on Wisconsin. That's what we know. And from a REIT standpoint for investments, that I think that rates are about to start going down. So that means I think REITs, real estate investment trusts, rebound in the next year or two. And then, going into the boomer retirement crisis, we'll see what happens. Again, I do think how we handle the boomer crisis depends on who's president. I think it's much more likely to only be choppy versus catastrophic if Biden wins. If Trump wins, I think we get 2008 all over again. But again, we'll just print money and fix it. It's just a matter of how bad do regular Americans take it. And I think that, 1 and 2%ers never really have that big of a problem, but everybody else does. And I think that we have to think about that in context of our investments. I think the REITs, when you take a look at their geographical footprints, and I said this with, I interviewed one of the REIT authors. I forget his name. He's the one that I try to forget, but he was talking about how great it is to invest in Florida real estate. And I challenged it on him 3 times and he just doubled down every time. I think Florida real estate is one of the shittiest investments out there right now. It's expensive, it's vulnerable, and the rich guys are selling, not buying. And I know this because I've been watching private equity firms get out of Florida, with the exception of a handful that I think they're partially of the belief that if it all blows away, they still own the land and they can maneuver financially where it doesn't hurt the executives, and they can sacrifice the shareholders. So I don't really want anything in Florida. I truly don't. So when I look at the real estate investment trust, that is something that I am very cognizant of. I really just don't want much of anything in Florida. There's a couple holdings and a couple REITs that have holdings in Florida, but they're not substantial. So, you live with it. But I think we got to be really careful on how we pick out our real estate. I like industrial real estate. I do think that is going to continue to do well. And I think that companies that are involved with residential is probably where the big opportunity is, because we have such a shortage in residential, and that has to be fixed. Paul Krugman talked today about how the big surge in immigration was very helpful to the economy, but now we have to make sure these folks have places to live. I will say that it's been very hard to find a house that I like, because a lot of the houses just aren't on the market because the boomers are locked in at low interest rates and they're not nearly ready to move yet. And they won't be ready to move until the 2030s and 40s. So we have to build a lot more houses. The builders are very expensive. However, some of the real estate trusts are cheap, and I think there's lots of good private equity deals out there. So, if you do have 6 figures to invest and you're an accredited investor, you ought to keep an eye on the things that I post once in a while about real estate developments that I'm involved with, because I think you're probably going to make around 15% on those. And, they're backed by real estate. There's not really much downside risk. That's why we do it. There's not a lot of downside risk. I mean, sometimes the timeline stretches out a little bit, but what we're building in that $20 million 40 to 50 unit building that we want to put in Milwaukee suburb. It's going to happen. We don't know when we're breaking ground, but it's going to happen. And that's a deal that, like I said, if you want something safer that's still going to make 15%, and I don't know how you beat it. That's a double of your money in 5 to 6 years. All right. The things that are also going on around the world, China and Singapore work on some green financing. China, because of the tariffs we just put on all their solar panels, I believe what they're going to do is supply a lot of the rest of the world with solar panels, especially the emerging markets. So I think this shift to solar is going to suddenly pick up steam within 3 years, but I think it's only 1 to 2 years out, because the panel prices have come down to well under $1 per megawatt, which was always kind of the barrier. That's where natural gas and coal are roughly. So now that solar is about the same price as coal and gas during the daytime, with batteries at night, it's still not cheap enough, but it's getting close. You're going to see a lot of people optimizing for daytime solar. What do I mean by optimizing for daytime solar? If you can have solar without a battery system, it's a no-brainer to power your house during the day, especially with air conditioning or heat in the winter. The overnight thing is a little bit more problematic because it does require a battery, and lithium batteries just aren't priced well enough, and they catch fire sometimes. So as the newer technologies come on, and there's flow batteries and other types of batteries already out there that, if you're not space constrained, are already pretty good. But the next generation is going to be even better. So 3, 4, 5 years out, batteries are going to be very easy to get for your home, and they won't be terribly expensive. That's coming. In the short term, you're just going to see panels for daytime use, and largely it's going to get put into air conditioning, which is another problem, right? This circle, our air conditioners aren't very efficient. So we need to find a way that they don't cause more climate problems, more carbon emissions. It's all coming. The technology is there. It's developing. The supply chains are coming. So we'll see. Now, there's a big idea that we're going to have a global recession, and we will eventually. But it doesn't look like soon, not in the next year or two anyway. So the Eurozone and the US are both reaccelerating after a little lull over the first quarter of the year, which is, as we know, and I've talked about over and over again, the first quarter of the year is always a slow quarter. Why? Because we're coming out of holidays, people have brand new budgets, and they slow spend, right? They're like, I just got all this money for my budget for the year. Let's figure out how to make it last to the end of the year. And then in the fourth quarter, if they still have extra money, then they plow it in, because you got to spend all your money by the end of the year. Your budget next year won't be as big. So the same cycle psychologically just plays out over and over again. And that's just the way it is. So now the economy is speeding up a little bit again in the summer, but inflation is not going up. And that really speaks to the demographics that we've gone over again. The aging of the population is disinflationary at least, and probably deflationary. So we'll deal with that at some point. But I do think that we mitigated the boomer crisis with everything that we did coming out of COVID. I think we treated that crisis and then a little bit of the next crisis. So if we don't elect the wrong guy, we can probably avoid a financial crisis. Emerging markets also have been expanding quickly. There's another article I wanted to put up here from the IMF blog. I didn't get it, but they are really accelerating, and the emerging markets are very, very interesting. So we will see what's happening there. In the 401k plan, I have increased my emerging markets holdings. So we will cover that in the next week or two before I go to Vegas. There's an idea that the US and Chinese economies are becoming irreversibly decoupled. I don't think that we're there yet. I mean, I think it's a breathy narrative that people like to have because they can, pound their chest and stomp their feet. But the reality is that there is a deal to be had. It's contentious. However, they're working on it. And I think it's going to boil down to, does Xi want a deal? Does Xi want to cut a deal with Biden, or does he want to roll the dice and be able to jam it to Trump? We know that Putin and Trump and Xi and Trump, we know who comes out in those deals, and it ain't Trump. So we'll see. I mean, when you think of it from game theory, probably the smart thing for Xi to do is cut a deal with Biden And then if Trump wins, then, just break the deal and start over. So I think that that's probably what's going to happen. And we know that there's a deal with Saudi Arabia coming. A lot of this has to do with currencies and bonds and foreign direct investment. I do think the Saudi Arabia deal that you'll see, I think in June, is going to be a big deal. If we cut a deal with Saudi Arabia, it's going to be contingent on them pushing gasoline prices down, and we know that that is important for presidential elections. So we'll see. We'll see how that plays out. The price of gasoline, if it's falling going into a presidential election, which almost certainly looks like it's going to happen even without Saudi Arabian cooperation, if they just do what they keep doing. But with Saudi cooperation, for sure, gasoline prices go down. The president that's in office, the incumbent president, I think has won all but one election when gasoline prices are going down. I think that's true. It might be two, but it's one or two. So we'll see. All right. Well, I hope that you all have a great weekend and put up your flag. Be a patriot. Put up your flag and be thankful for somebody that fought a fight that you didn't have to fight. And then think about the fight that's coming up. All right, everybody. Have a great Memorial Day weekend.